I never thought that area was that big of a risk. It's not that
State Farm knew.
But it's not that hillsidey. Like a lot of the residential area, I'll give you this. The Highlands, when you go up the mountain, I understand that. But when you go to the residential parts down below, I would never think that those were a significant risk.
Sure. Yeah. It's tough because, so I like to use this app. It's called Windy. And I've only ever started using it since I became a pilot. But it's really cool because you can sort of, not sponsored, you can sort of forecast what's going on with winds and where they're moving at different elevations, different locations, different wind speeds. You see it all. It's really cool. And when you play around with it, you actually end up seeing how the wind funnels between all of the mountains and the ranges we have. And as I was looking over the last few days of the fire, the Palisades were the perfect funnel for all of that wind. And I would venture to say, I mean, I'm not an insurance actuary. It's one of the licenses I don't have, actually, insurance out of all the licenses. But I would imagine the reason State Farm canceled 70% of their policies in certain regions in California, specifically the Palisades, was because they knew the wind patterns and could basically paint on a map and say, okay, this is where the funnels are. This is where our risk is. This is where we don't want to be. Now, I'm not here to defend insurance companies at all. Okay, insurance companies have a lot of problems. But I can tell you what the Wall Street Journal just said today, which is that insurance companies in California spend $1.09 per $1 they collect in California on just claims, which doesn't account for all their operating expenses, which could be another 30, 40 cents, 50 cents, who knows, maybe $1, I don't know.
So they're net losing in California?
Yeah.
So why do they continue to operate?
They don't. That's exactly why they leave.
I'll tell you an insurance comment here, but about a year ago, I wanted to bundle all of my insurances together between all the properties in California, the place here in Vegas, all the HARs under one policy.
Sure.
And I went to so many places and they say, oh, we'll insure everything, but we're not touching California. And I was like, okay, because this had never happened before. So I started calling other companies just to shop around, just to get an idea. Am I paying a fair rate? No one is writing new policies. And so I talked to my guy with my current insurance company. He's like, yeah, man, you're grandfathered in. You got in at like, because I started working with him in like 2011 when I bought my first property. The same company.
Wow.
And because I have a longstanding history with them and just keep adding to policies, never filed a claim, no nothing, they're keeping it for now.
Yeah.
But yeah, you can't find a new insurance policy.
Yeah. Part of that too is just, so it goes back to this political thing too of politicians want their votes again to get reelected. And so, well, what's been unpopular the last 3 years? Well, inflation. Okay, so the costs of things have gone up. We all know the cost of things have gone up. So of course the cost of insurance is going to go up. But when insurance premiums go up because they have higher costs to pay, that's very politically ugly for politicians. And so politicians try to fight it. So they put caps on it. And what happens anytime, and this is macroeconomics 101, what happens every single time we put a price ceiling on something? Shortages. And so that's what we have, a shortage of insurance options in California. And so California decided, okay. Well, we'll solve that problem by creating the California Fair Plan. So the California Fair Plan gives you temporary insurance for a catastrophe. It gives you no liability protection. So it's like a scam of insurance because now if somebody trips and falls on your property, they're like, oh, no, we don't cover that. They've got about $750 million in the California Fair Insurance Fund right now. That'll cover about 350 homes in the Palisades, and then you're out. Well, we just lost 9,000 structures. They're not all under California Fair Plan, but a lot of them are because State Farm just canceled a bunch of policies.
Fair Plan
people go to Fair.
Does have a $2.5 billion reinsurance on top of that.
Oh, yeah. So here's the funny thing about reinsurance is reinsurance is coming from the private sector, but reinsurance up until December of 2024, insurance companies were not allowed to add to the premiums that they collected the fees for reinsurance. So put a different way.
Yeah.
If let's say it costs $100, in calculated risk for an insurance company to insure your asset, whatever it is, $100. And then they go to the marketplace and say, okay, we're going to take this and we're going to sell that and or get insurance on this bundle of properties that we're insuring, reinsurance. We'll keep a portion of the risk. We'll keep 25% of the risk, but we want to sell 75% of the risk. Well, if it costs them $100 to sell that, now they're taking 25% of the risk, but zero of the money. They keep $0, which is obviously bad. Again, why they're losing money. So normally insurance companies say, okay, well, we need to sell this for more. So we add to the premium the cost of reinsurance. That has not been a possibility in California until December of 2024, when so many insurance companies were threatening to leave that California Insurance Commissioner finally U-turned and said, okay, we will let you add reinsurance costs to premiums so you can actually survive in California. So again, politics.
So what's the impact going to be on the average person with home insurance in California?
Terrible. Like rates are going to go up because, I mean, the way I look at it is, nobody thinks that the politicians are going to change. Nobody thinks that now magically California is going to build more reservoirs, have more water, have working fire hydrants. So you have to ask yourself, if Gavin Newsom tells you for 10 years, we're going to be better at fires, we're going to be better at fires, we're going to be better at fires. And let's say he runs an island called the Smith Island, okay? And you're like, yeah, I want to consider doing insurance for the Smith Island. And Gavin Newsom runs it. It's a town of 30 people, an island of 30 people. You want to offer insurance there. Are you going to trust Newsom to actually have water in the fire hydrants or the people that, operate under him, fire chiefs, whatever it is? Well, the answer for most insurance companies is no. They can't trust them because for not just years, decades, they've been told, oh, we'll be better at water infrastructure. And it just never happens.
What happens if someone's underinsured? I'm really curious what's going to happen with a lot of these properties because 2/3 of people in California are underinsured.
Yep.
And the average person is underinsured by 20 to 60%.
Wow, that's worse than I thought.
It's really bad because I did a whole video about this about a year ago, and it forced me to actually call my insurance company and up the limits.
Up your limits,
because I realized, wait a second, I'm covered $800,000 rebuild for a property that I'm going to have to probably spend 1.3 on, maybe. So I got the limits increased a little bit, but it's wild, and it's not going to keep up.
No, it doesn't.
An insurance company is never going to remind you, hey man, you might be a little underinsured here. They're going to keep it as low as possible.
Right, exactly. Yeah. Well, one of the reasons homes are typically underinsured is because codes evolve over time. Fire codes. Naturally, this is fair, but also because of the fragmentation of codes in California. So when I ran for governor of California, I said we should have one building code for the entire state. So that way a furnace that's approved in the San Joaquin Valley is also approved for Ventura County. Now you could have little modifications because I understand climates are different, but let's be real, 90% of building should have the same building codes throughout the entire state. We could have little different paint schemes and designs or whatever, but simplify the building code. Once you simplify the building code, it's easier for contractors to bid and actuaries to evaluate their risk because they're not dealing with, this has to meet this city and then that county's overlay and blah, blah, blah. It's a disaster. So fire codes are one. Also earthquake codes. A lot of the homes that were rebuilt in California or in Ventura County, they had to build in expensive earthquake retrofit pylons for new construction, especially on fill lots that were rebuilt after the fires. And people spent $400,000 on pylons for a $1 million build that they were only insured on up to $600K because now they have $400,000 of pylons that they have to build, which was never underwritten in the first place. Again, because the standards change for every city and every county, and nobody tells you, hey, by the way, if you ever have to rebuild your house, these codes just all changed, and it's going to be a lot more expensive. So that's one of the reasons people are underinsured. A second factor is really just usually the bump in insured value is maybe 1% a year or whatever, but appreciation and inflation in building materials is much more than the 1%.
Labor too.
Oh my gosh, yeah, especially in California. So that's also funny you mentioned that because if you want to get through the CEQA exemptions, you have to use prevailing wage labor, which is instead of market rate labor, you're paying maybe 2 times market rate labor for contractors to actually do work on your properties. And I'm not saying that people shouldn't be paid what they're worth, especially with their skill sets and all that. Just saying, insurance companies look at that. Oh my gosh, we have to get through CEQA and the prevailing wages and all these scattered building codes. Of course, it doesn't make sense to do business in California. Now, I'm not saying insurance companies don't suck. They definitely suck because they leave a lot of people hanging at the worst times in their lives. But frankly, I think a lot of that starts with the political environment and the failures of Gavin Newsom, local county officials, local political appointees. and so on.
So what does someone do if their home is underinsured, though? Let's say they lose their home in this sort of case. What happens if they have a lot that's valued at $2.5 million, but they have 600 grand worth of structure?
Coverage. Yeah, they can't rebuild. Unfortunately, most of them sell. Most of them will sell their lots to then developers who come in and they build. So they sell to spec builders. What I've found that lot owners will do is they'll kind of get together in like consortiums almost. They'll be like, none of us are going to sell unless we all sell for a higher price. So you see that. And so usually what happens is land developers, they try to get in early before people start connecting with each other. And developers, I guarantee you, developers are already calling. Everybody, every address.
On Twitter are posting already. They've already got offers.
Oh,
on
yeah.
The lots.
Oh, for sure.
Yeah.
Oh, yeah. Because the earlier they start this process to buy these lots, the better deal they're going to get. Because let's be real, this real estate, and I'm talking about the land, not the structures, this is some of the most valuable real estate in the world. Understand fires suck and they can happen again, but people want to live there. It's the best weather in the world. You have the best proximity to jobs. You have the Los Angeles International Airport minutes away from the Palisades. Like that, all the celebrities live there. That is the place for wealth and living. And so it will get rebuilt and it will be beautiful. So that land is very, very valuable, but it's just going to suck because a lot of people who live there now, they might get forced out because they're underinsured. They can't afford the difference. And they'll end up having to.
Yeah, that's a nuance that I think a lot of people are missing when it comes to exactly that. Is they think, oh, it's all these rich people. They have the money. Like, let's not feel sorry for them.
Not everyone.
I know so many people whose parents have bought their house there in like the 1980s.
Generational.
And they spent maybe $200,000 on the house, but they've kept it ever since. They've owned it the entire time. So now it's paid off. Sure, it might be worth $4 million on paper, but they didn't have that money. I mean, it never existed. They were living in the home. They never expected that.
Right. So now they get their underinsured payout of, say, $600K to rebuild their home, and then they've got a $2 million lot. They've got to pay off whatever loans that they have. They might never live in the Palisades again.